Good day, everyone. Welcome to Global Government News. Today is Thursday, October 7th, 2010, and I'm Darko. Welcome to Global Government News and this economic news segment. I'd like to start by just plugging my website, www.ggnonline.com. That's ggnonline.com. You can find the latest videos that I've posted up there, along with some other information. Find out a little bit more about me, where I come from, if you're a new listener. But let's start this this video here. This first one up is from the Wall Street Journal, and it is from today, October 7th, and it's titled "Stocks Drop on Job Jitters." Or jobs jitters. It says stocks slipped Thursday as jitters set in ahead of quarterly earnings reports and monthly jobs data, but better than expected employment and retail sales numbers limited the decline. It says the Dow Jones Industrial Average closed down 19 points, or 0.2%, and it says Alcoa led the measure's drop with a decline of 1.4%, which is funny because I've talked about Alcoa before. That's the aluminum company of America. That's right. That's where a lot of your sodium fluoride comes from those aluminum plants. And they were the ones that actually funded the research that made the case that adding fluoride to the water will help prevent tooth decay, because they couldn't get rid of their waste, their toxic waste, so then we pay for it to put it in our drinking water. And it says Alcoa rose 2.9% in after-hours trading as the company, which reported after the close, topped analysis expectations up. So we are getting our fluoride. It says the S&P's 500 stocks index shed 1.91%, or I'm sorry, 1.91 points, or 0.2% to 1158. The materials and telecommunications sectors led to the downside, while consumer staple companies were also weak, as PepsiCo weighed with a 3% drop. That's pretty much all you need to know. I got a lot of stuff to cover here. It says the next one is September sales, a topped forecast for U.S. retailers. It said many of the nation's retailers emerged from a slow summer to report stronger than expected sales in September, helped by back-to-school purchases. It says analysis said that September sales at stores open at least a year, a crucial indicator known as same-store sales, suggested what many have been hoping for. Consumers may be ready to open their wallets, even if cautiously, for the coming holiday season. It says we are currently looking very close at holiday sales, and back to school does help us gauge the enthusiasm of the consumer, John Lawn, a retail strategist at Kurt Salmon, said. And just moving on here, it says the next one is a corrected article from Reuters, and it says Forex dollar falls on policy and balance concerns. It says dollar hits 15-year low versus yen below intervention levels. Euro nears $1.40. Focus on ECB's whatever. Aussie dollar surges to 27-year high, close to parity. And just reading off this first paragraph, the dollar's downtrend gathered pace on Thursday as it slid to a 15-year low versus the Japanese yen and an all-time low against the Swiss franc, on the prospect of more money printing by the U.S. Federal Reserve. And that's the big news about in the economy right now, is the Fed printing off more money. Says the Australian dollar surged to a 27-year high against its U.S. counterpart after surprisingly strong jobs data revived talk of a Federal Reserve bank rate hike, while broad dollar selling pushed the euro to an 8-month high. Says the Bank of England and the European Central Bank both stood pat on their monetary policies on Thursday, underlying the possibility that the Fed may lead the way into more aggressive quantitative easing, which is seen knocking the dollar lower. So the next one is dollar set for sharp decline, Goldman forecast. The dollar will embark on a sharp decline over the next 12 months. Goldman Sachs forecast on Wednesday as policymakers in Washington look poised to press the trigger on another round of printing money. Nice chemtrail clouds in the background. The investment bank expects the dollar to drop to $1.79 against the pound in 6 months, and $1.85 in 12 months. Sterling closed at 1.5 in or $1.58 in London yesterday. The euro won't be spared either, with the dollar slump forcing it to $1.50 6 months from now and $1.55 in a year's time. This is powered by President Obama's stimulus package and a rebound in inventories. The U.S. recovery peaked in the final 3 months of last year and has been slowing ever since. As the summer delivered a diet of weak economic data, the conviction has strengthened among the growing numbers of officials at the Federal Reserve that it should risk another bout of quantitative easing or printing money to inject into the economy. The next one comes up is, let me get this little ad out of our way, and it's from CBS News, and I believe it's an AP article, yes. Gold hits another record as inflation fears grow. Gold continues race to new record highs as investors flee currencies over inflation fears. Gold prices hit a new record Wednesday, and silver prices surged as investors brought up the precious metal to hedge against inflation. Gold for December delivery rose $7.40 to settle at $1,347 an ounce Wednesday, breaking the record it hit the day before when it settled at $1,340.30 an ounce. Silver prices also surged, with December silver rising 30 cents to settle at $23 an ounce. Man, when I bought it, it was in 2008. I purchased some silver and it was $8 an ounce, and then it shot up to $18 an ounce on average. And I guess since then, last year, it basically went up about another $5 an ounce. So silver's surge reflected the metal's increasing popularity as a reserve investment. That's what I got it for. Next one up, gold hits record set for best week in 6 months. This is from Reuters. Unemployment claims drop while job openings rise, says, and of course when I say unemployment claims drop, you just have to remember, I'm not going to talk about the real unemployment rate like this, where they say the unemployment rate is 9.6. Well, it's actually probably about 18% to 20%. When you factor in those that are not collecting benefits anymore, unemployment benefits, but are still unemployed, they don't count that. But what I was going to get into was that, or the point that I was trying to make was that the numbers are just less, or there's less people unemployed than what officials and authorities had originally expected. So to them, it's good news, but for people out there that are unemployed and still unemployed, well, it's still bad news. Companies are laying off fewer workers and laying off, well, they're still laying people off, right? So that's what you got to read out of this. People are still laying off, and they're hiring very few people, business owners, and advertising more job openings, two encouraging signs that arrived a day before the government issues a September jobs report. But economists say employers aren't ramping up hiring fast enough to reduce the unemployment rate. Yeah, they need a huge percentage to recover a lot of jobs that were lost, and they're just not doing it. Some economists expect the rate to top 10% by early next year. So if they're telling you that, I mean, that it's going to rise, and I'm telling you that it's at around 18 to 20%, then you should just realize that about 1 out of every 4 people right now are unemployed. And once you get to that, 40% mark, where almost half the people that you talk to or know are unemployed, that's when it starts to get ugly. Let's just move on here, because like I said, I have a lot of articles that I'm trying to cover here. Says the next one is private sector sheds 39,000 jobs in September. Says private employers unexpectedly cut 39,000 jobs in September after adding an upwardly revised 10,000 jobs in August. A report by a payrolls processor showed on Wednesday. Says the ADP Employer Services report had been expected to show the private sector added 24,000 jobs in September, according to the median of estimates from 38 economists surveyed by Reuters. The August figure was originally reported as a loss of 10,000, It says the ADP report, jointly developed by macroeconomic advisors, come ahead of the government's much more comprehensive labor market report on Friday, which includes both public and private sectors employment. The U.S. stock index futures cut their gains after the release, while the U.S. dollar lost ground. U.S. Treasury bonds climbed. I just cut back to this last article, and this is a point that I would like to make as well. It says, in the meantime, applications for jobless aid are falling. Well, if you've hit that cutoff point, I mean, there's some people out there, like I have a friend of mine that's been on unemployment for, excuse my language, or part of my French, almost 36 weeks. And I don't know how they're able to do it, but they are. And, you know, it's, you know, he's a sheet metal worker, and he's, you know, he tries to work odd jobs here and there, but basically the unions, they just have no work. They're not building anything, basically. But it's like, okay, so the jobs aid runs out, you can only be on unemployment for so long. Well, then you're still unemployed. For the, you know, yeah, you're doing menial jobs here and there. It's not going to pay the mortgage and take care of your children and put food on the table. It's just going to pay off interest that goes to the government, basically. But yeah, I mean, so you know, your job, your unemployment runs out. It doesn't mean that you're employed now. But see, this is how they skew the information and the data. So that's why I said the real unemployment rate, those who are no longer collecting benefits but are still unemployed, is a very, very important number. We already went through this. This next one is 40% of U.S. workers delay retirement poll, and this is part of the agenda, if you want to call it that, is having you work longer for less. It's lowering your standard of living, and the days of having your nice retirement and pension and all that is down the toilet. You're a slave. You're supposed to work, and your owners, your slave owners, are supposed to get as much productivity out of you as humanly possible. So it says 40% of U.S. workers are planning to delay their retirement due to concerns about outliving their savings and fears of rising healthcare costs. Well, this is all inflation. Like I said, this is the hidden fraud and stealing that's been going on against, well, you can say the American people or sheeple, but basically worldwide. This is going on globally. It says this is a very short period that these people were living in, between 1940, maybe 35 to 1999, 2000. It wasn't that long of a period here in the U.S. It was only, like I said, 1940 to the year 2000 is only 60 years. So I mean, there's only this is with this generation right here. There was only 60 years of a real economic boom. And a lot of it was caused prematurely and artificially through war. That, of course, was false flag. But anyways, yeah, these poor people, you know, if we're lucky to live long enough to these people's age without, you know, unless the eugenics take its toll on us, then we're going to have to keep working. Yeah, Walmart as a greeter, at Walgreens, like I see this old lady that's, you know, God bless her soul, she's got to be 80-something years old. She's a cashier at Walgreens, and it saddens me, man. It's so sad. You know, we're all left out there alone to just fend for ourselves, and then, but yet at the same time we're living in a Soviet communist system. So it's a very, very messed up system, and it's not happy and hunky-dory and socialist, and we're all equal. It's a very hardcore fascist type that I like to call it. You know, it's just. Anyways, suburbs take hit as U.S. poverty climbs in downturn. Just have to finish up here. The American suburb is no longer a refuge from poverty in cities. Moving on here, I'm sorry. High unemployment rate, quote, new normal for U.S., says Stiglitz. Joseph Stiglitz says high unemployment is a new normal. Says the return of debtors prison. That's right. These guys make a really good case. Check out the links posted. Running out of time here. But yes, it makes a pretty good case that the debtor's prison is coming back. There's a lot of invested interest in buying your debt that you cannot pay. Says the 3 horrifying facts about U.S. debt. The U.S. Fed is now the second largest owner of U.S. Treasuries. There's only about $500 billion of Treasuries outstanding with remaining maturity of greater than 10 years, and the U.S. will default on its debt. Reuters, Fed, ECB throwing world into chaos. Kansas City Fed, economy doesn't need further stimulus, it needs to raise its rate. IMF chief warns global economic cooperation is falling apart. Thank you.